Hi guys, this is Jazz aka Trend Trader for you. So this week I decided to do an analysis on a forex pair on Aussie dollar with the comparing with the US dollar. Got few requests over doing analysis on the forex pairs rather than the SPY analysis, and that's what I'm picking for this week. So looking at this Aussie dollar, what I'll do is I'll look at the weekly chart, okay? Then we'll talk about one educational ingredient in it, which is how to draw the trend lines, okay? I'll show you exactly how you can master to draw the trend line. Everybody works differently, okay? That's the way I work. There is no 100% correct the way to draw the trend lines, way to draw the support. Everybody has their own way of drawing it. Some draw it in a bigger time frame, some draw it in a smaller time frame, but this is the way I do it. All right, this is just an opinion of what I do. You don't have to follow what I do, okay? So let's look at the Aussie dollar weekly chart. What is the trend? Okay, is it up or is it down? When I look at a trend, I want to look at the recent trend. Okay, that is the recent trend. The recent trend is beautiful downtrend. Lower highs, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. So the trend is the down. In order for you to, or any trader to take a trade, okay, you have to determine what the trend is. And in it's always best to trade with the trend, but you also always have to be keep an eye on where is the trend possibly could reverse from. And that's what traders do. They don't just completely, you know, blindly keep on going off of the trend. They always look at support, they always look at where the resistance is, and in order to find out the exact resistance or support or come pretty close to it, you use trend lines, you use horizontal support or resistance, right? So you use all the analysis to find out exactly where the support is. I trade right off of the naked chart. As you can see, I actually took out the volume too. I don't have a whole lot of stuff on here, and I'm going to add stuff that way you can see what I do from a naked chart and maybe fill it up with a bunch of trend lines on there. Okay, so look at the weekly chart. I know all you need to see right now is the trend, but I'll zoom in a little bit, that way it's more clear. Okay, so let's go down. I'm gonna get my trend line tool. In order for you to draw a trend line, you have to connect. Okay, again, you have to connect 2 points. Once you connect it, second point, which is, so first point is this. What's the second point? This. Then that is what you call a trend line. You can right click, edit properties, you can write extension, you can on, put it on, that way it'll automatically extend. You don't have to go all the way down. It's pretty much extended all the way down. It'll stay on the chart as long as possible. So that is how you draw the trend line. Here's the thing. Is this trend line valid? It's valid, but how relevant it is, right? You have to ask yourself, the price really have to come all the way down here? Let's just say if it comes within a week, few weeks, it has to come all the way up here to make this as a valid trend line, maybe could possibly as a resistance. But is this relevant to the price right now? It's not relevant to the price right now. The reason why, it has to cross other trend lines in a smaller time frames for it to cross above those, then it'll reach that, right? So that's a lower high. Okay, I'm gonna draw another one. So this what makes it a relevant trend line. This is a valid trend line. This is a valid trend line. But right now, what's in relative to the price action? What do you want to look at? This or this, right? You can draw a trend line all the way up here, right? You can draw a trend line. In fact, if you see trend line test here, trend line test here, that's another trend line test, price goes down, but that's not relevant anymore. So let's go back, let's go all the way down to the recent price action. So let's draw another trend line, lower high, right? You have another lower high right there. Let's just draw that here. I'm gonna just do that, and then I'm going to do edit properties, extension, right extension on. Okay, beautiful. So that's your recent trend line as you see right now. So what I'm going to do, I'm going to delete this. Not valid anymore, right? You can keep this, and what I used to, when I used to, we had the chat room and the Facebook group. I used to tell the members that drawn separate color coded. Okay, not going to go into detail. Okay, this is where I go into a lot of detail stuff. When I do the one-on-one and stuff like that. But what you are looking at right now is a recent trend line. So focus on that. If you need to make it thicker, if you need to make a different color, that's your call. That's the way you want to trade. That's fine. So that's what I see right now on it. Okay, that's the trend line. Testing this, testing this. You connect 2 points. Once you connect the 2 points, that makes it a confirmation. Second is a confirmation. Third would be possibly could be another retest of it and goes down, or it could break out. That's just price action as it unfolds. Let's go back. Okay, so it's not valid. Who cares about that? The reason why I care about this, if you click here, that's the low, right? That's the low. Connected this point, makes sense? Connected that point, and then I connected this point. Where is it meeting? It's meeting in this area. Let me actually even delete this off. I mean, once you know, that's why when I talk to traders, I tell them try to marry the chart, right? Try to fall in some kind of plan that I'm going to look at this chart weekly basis. So don't start looking at 20 stocks a week, okay? Maybe cut it down to 8 to 10. Do the analysis on them, but do a complete thorough analysis. That way you're not doing, kind of like a half-ass job, okay? You don't want to do that. You want to do complete analysis. That way you know that you have some kind of direction or where the price is going. So that's your beautiful trend line test in here. Look where it's coming to. If you look to the left of it, boom, all the way down, what do you see? There is somewhat of a support. Let's go back. I'm gonna do this. Get my rectangle in. Okay, so this area is possibly where I expect a bounce. Okay, so possibly right around this area. This is where I expect a bounce. I do see something around this area as well. Okay, because that is obviously your V pattern. Makes a comes down, price moves up. That's kind of like a V pattern in a weekly chart. And I'm going to make this a solid line. Okay, make it maybe, I know that now price comes in here. This is another support, but it has to break the support before it goes to downside. In my analysis, what I've done now that I know, right, that there is a trend line testing here, possibly if the price comes in this area, which is to the left, is also I teach about how to exactly pinpoint the support and where exactly you look for as far as pointing a resistance and your support levels, right? That's just one right there, and then there's one right here. So let's just see what happens. And here's where you get tricky. Okay, you know that you're trading the downtrend, right? You know that you're trading the downtrend, but you can always get a confirmation trade. I mean, you don't have to just say, you know what, I'm in here. You don't have to do that. You can wait and wait and wait for the right pattern. Maybe even use the indicator if you want. I don't know, stochastic or whatever it is that you want. You can use that, and Fibonacci levels or whatever you need to do. So that is what you're looking at in a bigger time frame, weekly time frame kind of analysis. Then you can go down into the daily. You can start plotting your SMAs, 20, 50, and 200 SMA if that helps you. I'm probably thinking this chart, the SMAs are probably above the price right now. So price is below the SMAs, meaning the downtrend is continuing to the downside. And in fact, it's breaking out of, it broke out of this channel right here. If you go in there, draw your rectangle tool if you want, right? It hung around this area, okay? Hung around this area for a while. Obviously broke out of here, going to the downside. Even that's why I said go a little bit deeper. You can go a little bit deeper before you see a reversal, or you might not, or possibly it breaks the support without giving any signal. Okay, there are always times to get on board, but you just gotta have to get the right entry, get the right setup. If you don't have the right setup, stay out of it. And believe me, you will get the right entry after you think you got the right entry, because you'll be stopped out. Like, man, I should have waited, right? Should have waited. It was there. Now, second time, should I get in or not? Second time, you don't get in. You actually sit out. And you're like, okay, price has gone up. Price has gone up. I didn't get in. Let me just get in now. Then you get in. And when you get in again for the third time or second time, whatever it is, you get stopped out because you got in at the wrong place, because you got in where the price was about to pull back. Then the price goes down in here, and you're like, why did I get stopped out? I should have just stayed in. The price shoots up again. So that's just the how the psychology works. So if you do your homework, do what the right trend is, line up your trend lines, line up your support, resistance, indicators, whatever it is, right? Just follow that. Just follow that plan. Define your the only thing, again, the only thing before getting in a trade that you know is your max loss. If you can just define that, everything else from there on is all planned out. If you know I'm gonna get in, this is below that is my max loss. This is what you're risking. You know that from the get-go. I don't care if the price comes down as deep as, to the support by the penny. If I'm not stopped out, I'm not stopped out. But if you don't follow the plan, you get in here, you get out over here, you're like, price went over here. I should have waited, I should have waited, but you were never actually stopped out of here. So you just gotta follow the plan, and the only thing that you know before getting in a trade is exactly your max loss. So just follow that, okay? All right, so now going back, I'm going to show you a little trick, okay? Going to go down a smaller time frame. So basically what you looked at in here weekly was more likely for your, long-term traders or swing traders, or they're waiting for the right entry. And once you determine if the weekly is still down, stay down, there's a reversal, then you can start looking for some kind of longs in it, right? In the daily, still down. So if you see a reversal, okay, now you have kind of refined it even more from the weekly to the daily. And now that you know, okay, the daily is saying let's go up, then you go up, right? So then you go down into the, so that would be your more like a swing trader, right? As far as your day trader, you always want to be of course you want to look at the daily for as far as your trend. But if your trend is down on the daily, what you want to tell yourself, where would I be shorting it, right? Should I just short right here? You don't want to short when the prices are already at wholesale. You want to short when you can, actually at retail. You want to short when the prices are available at the wholesale prices, right? So as for a day trader, go down into the maybe your choice of time frame is 4 hour, okay? My choice of time frame is 1 hour. That's where I look at. So looking at hourly picture, let's just look at this, right? I'm gonna show you a tool, okay? Show you a tool. Of course I did it, that's why I'm showing you guys, right? Your Fibonacci, right? Fibonacci retracement. So what is here's the thing, okay? Where do you want to short? If you were to short Aussie dollar, it's in downturn, where would you short this? You would short it where you think where the past is resistance or past support was broken. That's where you want to be shorting it. So where is that? Where exactly is that? This is a place, right? Does that make sense? That was your past support. If you go down to the daily, this is what we talked about, right? This was your bigger term support, right? Again, price has to cross above here before it reaches here. So what you do is you look for recent resistance, and that's where you're gonna start lining up your trades. That's where the price broke out of this little area, okay? So go down into smaller time frame. Again, now what you're thinking of yourself as a day trader. So go down a smaller time frame, go into hourly picture, right? What happened here? Price broke out of it. You see that big move out of here? Beautiful. That's that. I don't trade forex. I don't do forex. I used to. Just I'm comfortable with the stocks. But this was a beautiful short. I mean, very low risk short based on how many times this area was tested, and as it broke out, that's where you could have gotten on it. Okay. So how can you get on it back on? Let's just see that this is a support area. I mean, this is a support area which will, if price comes down, it could act as a resistance. Draw your trend line. Again, these trend lines were drawn in a bigger time frame. You can draw another one if you have to. Again, remember, connect this, that makes your confirmation extended. If it comes down, this trend line comes down to meet this further down, hey, that's your short, even getting more confirmation. So let's do one more thing. Okay, let's do Fibonacci. I'm kind of starting to like this to get a confirmation on it. Again, it is still an indicator. It's a static indicator over a dynamic indicator. It stays there, right? If I draw one, if I draw a level, it stays there. SMAs, they move. Stochastic, it moves. RSI moves. Your indicators like market profile, they're static indicators because they're permanent, right? They don't move. Once you draw a line, once I draw this level of Fibonacci in here, it stays there. It's just a line drawn in the sand. So basically, the way to draw the Fibonacci is you look for the recent move to the downside, recent big move to the downside. You go up and up and up and up. This is the most recent move to the downside. So you pick the origin of it, which is right around here. You go down to where the move actually has possibly could have ended. You don't know that. You could still keep on going down right from this area, keep on going down. But if it goes up, where would you line it up? Right there, 61.8% retracement. It's a golden ratio number. You can read up on it. There's probably 1,000 books, but I don't need to go into the mathematicals of it. Not that I actually don't even know it, but I do know that there are a few golden ratios. 61 point, actually there's one golden ratio and few other ratios that you want to keep an eye on, which are all highlighted here. 50% is not a retracement, but it's just a 50% of a move to the downside. So if price were to retrace back 61.8% retracement, that is where possibly more shorts could be coming in. Okay, what you need to know is at that point, once the price comes in here, what is your trend at that point? Okay, and that's where the trading gets a little complicated. Okay, what side should I trade on? Okay, I was short, and if I go short, I'm short in the uptrend. This is where advanced. This is how you become. You read 1,000 or do analysis on 1,000 charts a day. This is where you will become advanced trader. Okay, it doesn't happen overnight, guys. Okay, so this is what I'm looking at. If I were to short here, now that I know that right around here, that's roughly around there is where I'm going to be looking at. I'm going to delete this. That's where my 61.8 retracement is. So you draw your somewhat of a rectangle. Okay, you want to put your alert on here. Create alert above. Okay, you can do 61.8% retracement and at resistance level. Boom. You can set up this alert to come to your iPhone or your Android or whatever it is, or your email or whatever you want to do. Once you get the alert, then you're gonna start looking for some kind of reversal signals on it. That's where you become and that's where you enter a trade, because at that point you're getting a low risk, high reward kind of possible setup because your trend is down. That's where you'll be shorting it again. Also, keep an eye on your weekly. The weekly is very close, right, to that big trend. So if this area goes up from here, right, if the price goes up from instant to upside, but it doesn't come down, possible short. But if the price goes down deep into it, shows you a very solid reversal, then you might want to be careful about shorting this area. Okay, then you might want to be careful about that. But other than that, if you see price coming down, look for possible reversals. Okay, that's your one support area. Then you have one down here, so keep an eye on all of them. Okay, so hopefully that helps, and that's almost a paid analysis that I just did. So enjoy that, and guys, take care, and thanks for all you do. Take care. Bye.